Hey, it's Michael Saul with the Stock Market Trading Watch List for Friday, August 5th, 2011. Special edition. I'm going to also go over some key levels on the indexes and some sectors as requested. So let's start with the SPY. Now, I do a full SPY video on the blog, so you can go check that out. We held support here, and if we break that, we're looking at about 118. You can see that 117.93 number as the next support number, so another 2 points down. Okay, now if we bounce here, I would measure 50% of this candle as first resistance on the way up, and then obviously you're going to have to measure it from the start of this move down to get longer term levels. I mean, look, we're stretched here. Do I think a bounce is coming? Yes. The VIX spiked, trend closed over 2. I mean, it was closed over 4. Volume was capitulatory-like. The down volume was severely skewed versus the up volume. So I think there's a chance we bounce. Do I think it's as easy as the super gurus make it out? Oh, just buy gap downs? No. I mean, it definitely didn't work on Thursday. Okay, so if we do gap down on Friday, I'm going to be watching that for a buying opportunity, but I'm going to be looking to see a pattern set up on an intraday time frame, a smaller time frame, so I can lean against it for support to know that if it breaks it, I'm wrong, right? Because just buying randomly, right? Let's see if the SPY gaps down to 119.20, right, down $1 from the close. Okay, is that the spot to buy? Well, why? Because there's support down here, another 10 points down, right? Well, it's actually their whole points, but I'm comparing them to the S&P futures, right? So, if they gap down 10 points, what do? Do you buy there? Well, the next support's 10 points down. Yeah, but it's a big gap down. Maybe it'll fade. Well, this didn't fade. Okay, so, and this one took a long while to even, try, right? It came up a little bit, and then it just rolled over. Right? It never got the full fade. I think the futures did, but the SPY didn't. So, that's what makes it more difficult. But if we gap down 10 points and we form a base that's, once again, I'm going with the futures, so I'm sorry if I'm confusing anyone. If we gap down $1 and then we form a little base that's maybe 40 cents wide, well, then we know what our risk is if we're buying one side of the base and putting our stop on the other side. Right. So anyway, enough of that. That's the trading plan that I'm looking for. If we gap down, I'm looking to see if a pattern sets up, so there's something to lean against. And that's if we gap up, then it's a different story. Then I'm going to be looking for intraday resistance. Right. Okay. So that's the levels to watch on the SPY. The Nasdaq 100. Okay, the Nasdaq 100. We can throw up a Fibonacci grid here. All right, you see, we're through the 78.6% retracement of this swing. That's bearish. So these lows down here at 21, basically 2181. Okay, so 2181 is support for the Nasdaq 100. You can see down here, we also held it. This support zone at 2189. So could it be a triple bottom? Well, most triple bottoms don't hold. They like to break, right? But it is support, and it would be a 2 points of support down there. So 2181, looking there. Let's look at the Dow. Okay, now the Dow, everybody talks about the Dow, and let's quote it in the media, but it's 30 stocks. Okay, I don't feel it gives anywhere close to a good read on the entire market. I think the S&P 500 is a much better index to use. But anyway, we're through support. Previous resistance here is now support, and went through it. So we have a little bit of a value area here, right? Some congestion here. So watching this 1206, what is it? Oh no, that's the wrong number. Sorry. 11206. I was going to say 1206. No, 11206. Okay. So 11206 down to, you could probably use these lows down to 10929. All right, so that would be the next support level to watch. And I think the best chance for the bears is a bounce up over the next several days, flagging, and then resumption of the downtrend here. Okay, so that's the Dow. Let's look at the Russell. Okay, the Russell, which was holding the Wednesday lows for a little bit until it gave it up also. Let's see, you can run a Fibonacci grid here, and then you could see we're right at the 50% of this last swing. So if this breaks, next support would be down here at 694. 694. All right. Once again, wouldn't be surprised if we got a bounce for a little bit. I mean, look how stretched we are for the moving averages. So the market likes to revert. So I wouldn't be surprised if we get a bounce up. And I'm not talking about a huge rally when we go to highs. Right? Who knows? Maybe that happens, but I doubt it happens in a couple of days if it does. So, watch the bounce, watch the leadership, watch the volume, etc. More than likely, it's going to be a light volume bounce, and everybody's going to be looking to just cream it again. All right, let's look at the stocks. Okay, so we could take our Fibonacci grid, and we can go like this. And next level to watch is 342 and change. What is it? Can we just use 342? Can we use 343? What are we going to do? Yeah, 342. So 342 is support on the stocks. Let's look at the Biotechs. Okay. Going to go to the banks first. I don't know why, but I said Biotechs, but then I typed in the banks. You can see the banks broke this key low here, but still have a little double bottom support down here at 41.71, 41.42 to 41.71. Okay, now let's do the Biotechs. Okay, just a wicked move here. Wow, whoosh, whoosh. All right, so right at support right here. And you got next support from previous resistance at 1122.36. And then you got support at 1038. 1038. Okay, that's this low here. This little inverted head and shoulders that popped up. That's the low of this right shoulder. Okay, let's look at the oil. I'm going to use the OIH for the oil. Broke the 200-day. Broke this support. Okay, next support would be over here at 135.17. Okay, the trend line up here broke, turned in. So, turned down rather. So turned in, but turned down. Okay, so that's support right there. 135.17 on the OIH, down 13 points. Okay, let's look at GLD. Gapped up and formed a bearish engulfing pattern. Watch the moving averages there for support. SLV. Okay, had a nasty day. Definitely underperformed GLD. Gave back a whole bunch of grinding gains. Watch these moving averages down here, 36.35 area for potential support. Look at a couple other stocks. Apple broke below the 20 EMA and filled the gap. So if this is going to get some continuation down, very key level to hold is going to be this 364.90. So use 365. 365 give or take 10 cents, right? 364.90 is the actual support number. That gives way. Watch these moving averages down here at 353. Google, okay, 200-day moving average, key and critical support at 575.59. All right, if that breaks, watch this 89 EMA and these highs up here, 551, and this is 555, the 89 EMA. Goldman, okay, looks like wants at least a new low here. Below this, below 125, you're looking at 123.78. RIM, well, I just continue to watch the carnage here. Hit the target we were looking for below here. Looking at 22.50 as the next support level. Priceline. Okay, Priceline had a really nice after hours pop here. All right. So, ugly day. Didn't quite get to the 200-day. And then, boom, right up at 530. So, will this be a sell the news kind of move? I mean, 530 only bringing us back into the middle of this. So watch Priceline. LinkedIn was also up. Okay. It wasn't up as much. It looks like I thought it was up bigger than this at one point, but this little consolidation here. It's sloppy, so I'm gonna have to wait and see what that does. Baidu. Did we look at Baidu? We have not looked at Baidu. Okay, that's touching the lower end of this channel. We have the moving averages right here. 138.50. 138.58 is the 50-day. So that's it. Real important not to try to catch falling knives. Okay, but that being said, there is opportunity here. Okay, there's either opportunity to get on board if the trend continues, or if we're going to get a reactive bounce. My opinion here is this impulse is sharp enough to now warrant us to watch for a light volume or lighter volume, poor participation bounce that will set up as a flag and lead to more downside. That's what we're looking at on the short term. Now, some things to watch for signs of a potential turnaround. And when I mean a turnaround, I do not mean that we just zip higher. Okay, I mean turnaround like maybe we're washing out the bottom and maybe there's a little change in the tide and we're going to get a little bounce. All right, the first thing you do is watch your sector list and you watch to see if technology or financials are resisting. Like on Thursday, everything was just going down, including the metals and oil and everything. But when you start to see us selling off, but there are some key sectors that are showing relative strength and not everything's participating, then that is a good sign, and it's a sign that something could be happening, right? A little change in the weather could be happening, right? I mean, look at this breath. This kept me from trying to pick a bottom, so to speak, on Thursday, okay? Because it just kept going down. Even we had that beautiful bounce at lunchtime, right? I was writing on my blog, okay, looking for a lunchtime low here, and we got it, and then we bounced nice. I mean, it was a beautiful bounce, and breath just was like, yeah, no thanks. Just kept getting weaker and weaker and weaker. Okay, here's that bounce. I mean, this is the futures. So, the low was 12 and a quarter. It went up to 12. I mean, it was a 16-point bounce. And breath just did nothing. I mean, it just kept going down. That's a very heavy tape. And, it's tough if you're short and something goes 16 points against you. You're like, okay, I guess I'm done. And then it just rolls over and even goes lower. So the volatility is definitely increasing here. And when that happens, it's really the time to really look at what you're doing money management-wise. A lot of people think, oh, money management, that means stop losses. Stop losses are a part of money management. They're probably the most important part, but they're not the only part. Okay, size management, setup management, what setups you're going to avoid, what setups you're going to take, what setups you're going to look for when different volatility conditions are present. So anyway, the model for Friday is digestion. I've been saying that, okay, for a couple of days, though, and this is just, it's not an outlier. It's not a black swan or anything. I mean, the market does this. Market can go into a sharp trending move. Okay, so that's what this is, and this is the start of something. This is an impulse. Like I said, I'll be watching this one for a couple of days. Maybe, who knows? Could last a couple of weeks at this point with the size of this, right? Usually the bigger the move, the longer the consolidation after it. But I just have a feeling that the anxious bears are going to be looking to just chomp all over this with any lift that comes with low volume and poor leadership. So that's what I'm going to be watching over the next, at least few days. All right? So that's it. Have a great trading day on Friday. Job numbers out early in the morning. So there could be volatility at the open. And I'll talk to everybody again over the weekend.